So how do individual investors feel about the stock market, and what are they doing with their money? Let's find out now from a man who is in close touch with them, Walter Bettinger, CEO of Charles Schwab Corporation. Walt, nice to have you back on the program. Let me begin by asking you, how would you describe investor sentiment right now? Optimistic, pessimistic? Are individuals feeling that they missed out on the rally, or are they participating? What are you finding?
Well, Susie, thanks first for the invitation to be here. It's great to be back. I think most of our investors at Schwab are feeling pretty good. As you know, we're not advocates of market timing, and what we recommend to our clients is develop an investment plan that is going to have them taking a long-term perspective, understanding their risk tolerance, making sure they diversify from the downside standpoint, staying invested, not trying to guess the market, and keeping expenses low. So the investors who follow our advice at Schwab have done quite well. They've caught a very, very nice run in the last 3+ years.
All right, so you say have a plan, but you know, this is a very confusing time. There are a lot of choices out there. People aren't sure, should I buy individual stocks? Should I turn to an index fund or an ETF? U.S. stocks versus international. A lot of confusing decisions to make. What do you tell Schwab clients should be at the core of every single portfolio?
Well, I think every portfolio has to have a weighting in U.S. stocks. We're still the strongest, largest economy in the world. Our stock market is the most liquid. I believe it's the most trustworthy market out there. And core U.S. stocks should be at the heart of every portfolio. But I guess what I would add is that maybe even more important than that is understand your own risk tolerance. And volatile periods like we experienced during the financial crisis made a lot of people sit up and take notice that maybe their risk tolerance was a little bit less than they had been investing at. And so understanding that risk tolerance, as I indicated, protecting your downside with diversification, that's maybe even more important than what you put at the center of that portfolio.
Well, you heard Mohammed El-Arian in that report that Tyler just did saying that he's walking away from risk. But do you find that as the market keeps going up, that investors are taking on more risk, or are they becoming more cautious?
Well, I think investors have moved more into the market. The mutual fund inflows show that in recent times they have moved more into the market. Frankly, just the market going up, of course, is an indicator, as we know, that there are more buyers than there are sellers. But I think that the timing is less the issue than the realization of people that being in the market for a long time is the only winning strategy. Guessing the market is just so difficult. I like to say that even that broken watch is right twice a day, but that's no way to invest. When you time the market, all you end up doing is timing losses. Now, professionals like Mohammed or others, they might be able to make small moves, and he even indicated, I think, in his interview that he was only walking away from risk as opposed to moving aggressively away. That's not necessarily a bad strategy for someone who follows the markets every day. For the average investor, you got to stay invested. You got to live with some of the ups and downs, and in the long run, history shows you're going to come out ahead.
All right, lots of good advice. Well, thank you so much for coming on the program. Walter Bettinger, CEO of Charles Schwab.